Good morning and thanks so much for tuning into the Trade Setup with me, Niraj Shah. In amongst other news, the big news for the day, according to me, is a note from Morgan Stanley which points out that India is set to become the largest emerging market. And in fact, it has become the largest weighting in the MSCI EM IMI index, overtaking China yesterday. And the weightage is knocking on the threshold of becoming the largest emerging market, overtaking China. Who would have thought about this, really, a few years back? But I think this is testimony to India's recognition as a key global market from flows perspective. And this is, to my mind, is big news. Anyways, we'll talk about that a bit later on television. First, the global, what the global markets are doing, precious little for US and Asia. But, and let's take the global news flow first before we get to the implied open. So what happened? US crude fell below $70 per barrel to a 9-month low, which is big positive, I think, from an India CAD perspective. US 10-year bond yield slipped to 3.76% as well. And amongst other news, bond market yield curve in the US returned to normalcy from the inverted state, which is maybe positive from a US market's perspective. But point being, viewers, the implied open suggests a 113-point uptick. And I'm so glad that yesterday we pointed out that there was no need to panic, because somehow the India inherent factors for now still continue to point towards upside. So what is one key factor, I think, from a trade setup perspective? I think enough and more people recognize now that the Indian markets are extremely low beta compared to Asia or emerging market peers. Effectively, when the Asian markets fall, Indian markets fall less. When Asian markets rise, sure, India may rise less, but that's okay, because the steady state is much more positive than a lot of volatility. I believe that the long positioning may still have positive results. So there's no need to think of going short at the current market scenario. The bias still remains on the long side, according to me. OMCs, to my mind, remain the safest bet with crude price behavior. And I'll get to the two brokerage notes yet again, one from yesterday, one from today. But other piece being that upsides in expensive stocks may now start seeing some serious profit booking. Now, did you know, viewers, and I have this very interesting statistic that will come up on your screen, that the market capitalization of defense and railway stocks has reached 18 lakh crores. Now, if you think this is okay, for perspective, in FY19, the market cap was 1.2 lakh crores. Now, this therefore reflects a market cap CAGR of 67% versus a profit CAGR of just 21%. I've borrowed these from a note from Ikigai, Pankaj Tibrewal's note, but it's quite a stellar statistic, really, isn't it? But be that as it may, let's talk about stocks in focus today, not a very long list. Sona BLW might be in focus. Let's open a QIP at a floor price of 699, about a 3% discount. There's a lot of talk in other media chat handles about some acquisition that they might do. But be that as it may, watch out for Sona. Century Textiles might be in focus, armed to buy Hindalco land in Kalwa, Thane. Why this is important, viewers, is simply because Century's now shown that it's got access to some very marquee land parcels of the Birla Group, and that might actually give it access to premium land bank for the next few years, really. So watch out for this one. Vedanta, to long-term rating upgraded to AA from AA minus. Who knows, might be positive for this stock. Keynes Tech has said that no formal letter received from the government for building a semiconductor unit. Now, I don't know if this really hits the stock today or no. Maybe it does, but I think a letter might be on the way. So don't know how seriously the market will take it, but watch out for this one. Why OMCs, right? Viewers, you would ask. So Axis Cap has come out of the note. They say that they estimate OMC earnings, high gross margins on auto fuels of 17.4 per litre versus 12 rupees per litre. Imagine the gap on the earnings that OMCs are doing as a result of the crude price decline. The higher margins due to crude price decline pose upside risks to earnings. So watch out for BP, HPRC. HPCL was the big one yesterday, and that was because of the MK note. I just want to revise what MK said yesterday. They say the OMCs are the most obvious and most powerful investment hypothesis, and they expect OMC earnings to blow out on the next couple of quarters. Okay, so watch out for HPCL. That was the best bet. Lastly, Zomato. JP Morgan has a note on Zomato. Overweight rating, target price raised to 340 from 208. They say that incremental store economics should turn more positive on EBITDA. It will give Blinkit a chance to really do well. And some of the other things that they have done give them a very good target multiple. So watch out for Zomato in the session today. All in all, expect positivity. Thanks so much for tuning into the Trade Setup today.